Welcome to Tennessee Real Estate Insider. I'm your host, Allyson Spencer, realtor and property manager here in East Tennessee. And today, joining me is Lucas Johnson.
Thanks for having me.
Luke is the #1 lender here in the Tri-Cities with Movement Mortgage. So Luke, we're so excited to have you today and just hear all about loans.
Yeah.
So today our episode is about loan types. And before we dive into the different loan types, I thought maybe you could help us by understanding a couple questions. Maybe what are some of the most asked questions that you get from potential buyers?
Okay, yeah, I think there's a lot of common misconceptions that people have with loans, just because bad information that they've been fed from either memes online or their friends or their parents. I think the biggest one is that I need 20% down for a down payment, or that the first-time homebuyer loan is always the best option. That's another one that we get quite often. People think that just because they're in their 20s, they just freshly got out of college, that they won't be able to get a loan because they don't have long enough job history. Your credit score needs to be 800. So there's a lot of these different factors that, while we do look at all those factors to see if you qualify, you don't necessarily need to be at the top 10% of people to be able to purchase a home. I mean, as long as you have a 620 credit score, even as low as 580, I don't recommend that, but you could go as low as 580. But as long as your 620 credit score, you have a solid job for the most part, and even zero down, you could get a house. So I think those are the biggest misconceptions. But I think there's a lot of pessimism just in the last 10 years with inflation and how house prices have gone up, that it's still unaffordable to be able to get houses. And while I think that might be true in cities, it's not necessarily true in East Tennessee. It's getting less true because stuff has gone up, but there's still areas in here, whether it's Elizabethton, Irwin, the outsides, that are still pretty readily available. We just did a loan for an 18-year-old who was fresh out of high school, got a job. Yeah, they're not making, the less than $50K, and we're able to buy a house still.
Wow.
And he's renting it to his buddies, and so living for free. But yeah, it's still very possible.
That's so encouraging to hear.
Yeah.
What do you think the #1 reason for people not taking the first step for getting that pre-approval is? Do you think it's just the fear of the unknown, of not knowing what they need to qualify to purchase a home, or they just don't realize they need a pre-approval?
I think it's rejection. I think people, not to get all psychological, but I think most people, they have a fear of rejection in any form of their life. Mm-hmm. And so they think when they come to a bank, they're going to kind of show all their financials. People are either going to judge them, or they're going to say no, and they're not going to be able to. But I think it's the knowledge that you get when you sit down with a lender one-on-one and you go, hey, this is what my financial picture looks like. How can I buy a house? And you come at it from that aspect. Even if it takes 3, 6, 12 months, I've had people work on stuff for 2 years just because they were in such a hole to be able to purchase. And so I think that knowledge base of hey, how do I get my credit score up? Every bank I've ever gone to, they don't take the time to go over my credit report, give me an individualized plan to fix that if that's the problem. How much would I need to make in order to be able to qualify for said payment? Just asking those questions, I think, is huge. But I think most of the time people just think to themselves, oh man, this is kind of awkward. If they say no, then I'll feel like whatever. And yeah, at the end of the day, it's we're trying to get loans closed because that's how we get paid. So it's not going to hurt, Better to know where you're going.
I have to give you a shout out because you have helped so many of my clients purchase homes. Mm-hmm. And several clients recently, there's always stories with you and your company with these success stories. I'm just going to tell a couple stories and chime in. But I had one young lady a few years ago. She was renting a 600 square foot apartment and was ready to move. Mm-hmm. She contacted me about potentially renting, and I said, have you considered buying? She hadn't. She didn't even think that was a possibility. She had no money and very low credit. Mm-hmm. And I put her in touch with you all. You walked her through it for several months. And a few months later, she purchased a home. Mm-hmm. I think it was last year, after she had lived in it a year or two, she ended up selling the house and making $50,000 on selling the home, which this was a very inexpensive home to begin with. But it changed her life.
Oh, that's nice.
And you all helped her get her credit where she was able to do that.
Well, I think those are always the deals, and my team can definitely, think they would feel the same way. Those are the ones that are most rewarding, where somebody's really trying, they actually listening to what you have to say. A lot of times you give advice and people just but if they actually are putting in the work and the steps, and then by the time you've kind of taken this journey with them for 3 or 4 months, that when they get to that closing table, it's just yeah, I'm so happy for you.
Yeah, absolutely. Well, choosing the different loan types. Let's talk for a minute about what those are. I know we have some conventional and in-house loans and government-backed loans. Could you break those down for me and what those look like? Maybe we'll take them one at a time so I can ask a question or two.
Yeah. I think so.
What are the loans out there?
The 5 major ones are conventional, FHA, USDA, VA, and THDA in our area. I would say those 99% of them, those are the loan types that everyone goes through. The most common one being conventional. This is your typical, you have to have good credit. Usually, if you're having a larger down payment, you can get away with having a lower credit score. But for the most part,
what is the typical credit score for that?
If you're putting 5% down, you typically want to be above 720 or 700 to make it worthwhile. If you're putting a lot down, then it doesn't really matter. You have to be above 620. But usually this is what I would say 80% of the population gets. This is your typical 30-year fixed rate. If you put 20% down, there's no private mortgage insurance. It's usually your cheapest, best option. And that's why most people use it. So I would say...
Private mortgage insurance. Tell us what that is for someone who isn't familiar with that.
Okay, so what makes up your payment is 4 things. So you got your principal and interest, and that's just the principal and then the interest on the loan. You got your taxes, and then you got your insurance, and then the mortgage insurance, you can shop it out to 5 or 6 different companies. If you put less than 20% down, it's just a fee or an insurance that protects the mortgage company in the event that you go belly up or you go you foreclose on the house, because you're not putting that equity piece down. And so it's typically based on credit score and debt to income ratio, how cheap it'll be. And so if you're 780 or have a really good credit score, it could be really cheap. And then if you have less of a good credit score, then it could be pretty expensive. So that's why usually you want to be over that 700 or 720 mark, because if you're below that, you typically want to go to the government route, where it's just mortgage insurance paid through by the government, which is artificially set at a rate rather than having companies bid it out. So I know that was a lot, but it's just that. And most people think mortgage insurance is so expensive. It's really not, and it becomes less and less expensive the more you put down in 5% increments. So if you're doing 5% down, let's say it might be like $150 a month. If you're doing 10% down, it might be like $80 a month.
Okay.
If you're doing 15% down, it might be $30 a month. And then it falls off at the 20% marker.
Wow.
So that's for conventional. For
Okay.
FHA, this is a lot of first-time home buyers. It's not a first-time home buyer loan. Anyone can get one. But it's the first loan that I got when I got my first house. It's 3.5% down. You have to have a credit score of like 620. The interest rate is pretty low. The mortgage insurance is pretty low. But that's the one where most of the time, if you're a first-time home buyer and your credit score isn't necessarily above that marker, that most people are going. You can buy anywhere, whether it's in the city or the county. There's no income limits. The debt to income ratio can get stretched pretty high. So that, I would say most of the time people go that route. Third, VA loans. If you're a veteran, they're the best type of loan to get. It's 100% financing. If you're funding fee exempt, there is no MI to begin with, but also the funding fee can get waived if you don't, if you're exempt from it. They're anywhere, city or county, no income limits. You can get multiple out at the same time. So I've had a lot of veterans. They'll buy one, live in it a couple of years, and then buy another one, keep that other one, rent the other house out, and they still no money down with a really cheap interest rate. So most of the time they go that route. You can stretch the debt to income ratio pretty high as well.
Now,
on that
tell me
one.
about these VA loans. I know we recently closed a deal together, and my buyer was a veteran. Is there an option now if the rates go down to change that?
Yes. So there's a VA IRRRL refinance. So it's we call it it's like a streamlined refinance, where we're not going to look at like appraisal, or we're not going to look at debt to income ratio. We basically see, have you made your payment consistently and on time for 6 months? And if you've made that and the interest rates are lower, then we can just reduce your loan and roll in a couple grand of closing costs. It's really relatively a cheap refinance option.
That's amazing.
So,
that is awesome.
Yeah, a lot of people like to use that option. So even when rates were peak, like 7.5, and now they're down, we're starting to see those come in. I actually quoted 2 today. So the VA IRRRL loans for the refis.
Nice.
For USDA, those are loans that are in the county. So you can go to the map and just type in USDA eligibility. In our area, all of Elizabethton, Piney Flats, Irwin, Blountville, half of like parts of Jonesboro, part of the south side of Johnson City, like those areas are all eligible. It's a no money down loan as well. They're a little bit more tight on the debt to income ratio, but the point, they're just trying to get people to move into those rural areas. You have to go to the state for one extra, but again, it's a great option that we've had several first-time home buyers take advantage of.
That's awesome.
Just because the payment's relatively low and you don't have to come out of pocket with too much.
Yes.
And then the last one is THDA. It's a grant that usually pairs with an FHA loan. So you're 3.5% down if you don't have it and you're within income limits. You go and take a first-time home buyer class. They're going to gift you your down payment money, 5% of the purchase price that you can use to pair with that so that you don't have to bring any money down. It's an option that I like if there is no other option, but typically, or when you sell your house, then you have to pay that money back, and so I can eat up into some of the equity. Right. So I don't always recommend it. I usually recommend it if it's like, hey, there's no other option. I really need to buy a house. But I explain it, and that way, if that is the way to go, then we'll go that route.
That's awesome. I know I helped a buyer a few months ago with you, and he also didn't think he could purchase a house, this veteran. And,
yes.
He ended up walking away with a check at the closing.
Yeah.
He actually did not bring any money, and now he is a homeowner, which is amazing. And it's going to change their life. You know, I think what you do is so admirable because you really don't give up on people. I think that's why you're the #1 lender in the Tri-Cities. You're going to make a way. And there's a lot of lenders out there who are going to tell people no, but your first response is yes. And not only do you tell people yes, you really back it up with a plan. So if it's no now, it might be yes in 6 months, but your close rate is so good. And when I talk to first-time home buyers, like, what does that mean? What is the close rate? But, you know, you don't just throw out pre-qualification letters or pre-approval letters. You really do your research. And so when I approach a listing agent with an offer and they see that my client has been pre-approved by, you know, Lucas Johnson with Movement Mortgage, that's very assuring to them because they trust that you're going to see it through. And I don't think we've had a deal fall through in years.
Yeah, I mean, I think what's great about, and I would love to take credit for that and say that it's all altruism, but for the most part, number one, I don't get paid unless the loan closes, and I got to keep up with my wife's Target addiction. So that's one, and I got 4 kids. Number two, the deals don't fall through. What's great about it is at Movement, there's our ops team, our operations team. They're great about, I'm able to pick up the phone call, describe a situation, and then go, all right, if these are all the variables, what do we need to get in order to make the deal work? Is this possible? And they're really great about putting the pieces together. So having that as a resource to me has been absolutely huge and paramount for us, like the success of our team. Also, the people that are processing our loans, they're very well versed in looking at asset statements and making sure, foreseeing any kind of problems to try to get around. And I think at the end of the day, you got to know the guidelines. It's kind of like we're almost like lawyers where you got to know the case, cases. They have to know cases. We have to know guidelines to be able to make things work, or at least tell our clients like, hey, if you do this, this, and this, then a deal could go through. So like, for example, if you have on a conventional loan, if there's less than 10 payments left on a line of your credit, we don't have to count that payment against you from a debt to income ratio perspective. So if there are a couple payments out, I tell them that, and then down the road, it's like, oh, okay, now I'm going to qualify for this much. So yeah, I mean, different things like that. Oh, hey, you could borrow from your 401k and get a 401k loan for your down payment rather than having to get a gift or wait and save up all this money. So being able to know just the levers to push, I think, have been huge.
Absolutely. And as far as which loan type, what is your most popular loan type that you see buyers choosing?
I would say the split that we have is probably 70-30 conventional to government. So like FHA, VA, USDA, THDA, all government. And then conventional would be the other option. Most of the time people are getting conventionals if they're purchasing. But we are seeing a lot more government just because they're a little bit more lax on down payment rules and credit scores. So I'd say typically first-time home buyers is probably 50-50. But overall, on the scope of things, I'd say it's about 70-30.
Okay. what would you say some of the hesitations with a government-backed loan are, and do you think they're as tough as people think that they are when it comes up to criticizing the house?
Yeah, I think the biggest hurdle for people is that the appraisal on a conventional loan is like, is it standing? Yeah, then they're going to be able to do an appraisal. I'm not saying that there aren't fixes, but there's major things. So like if there's sitting water, if the roof is leaking, if there's no, like the power, electrical wires are hanging, like that type of safety stuff is what they care about on conventional. FHA and a lot of the government stuff, they'll go into extra things. So like chipping paint can't be there. You can't have any cracked windows. You got to have handrails on porches and things like that. But, as long as you go in eyes wide open and think this is probably going to cost me $1,200 to fix all these smaller things, it's really not that difficult. I've seen some houses get through where I'm like, oh, it was a tough house. It was real dated. But then you just have to, repaint the windowsills, fix one pane of glass, put in a handrail, which can take a week or whatever. But then if you at least have that option to where you're willing to take those FHA, USDA loans, it just expands the buyer pool, which ultimately means more competition, which drives up prices. So you as a seller can make more money.
I love that. Well, thank you so much for telling us so much about all the loan types today.
Yeah.
We are ending this episode. Stay tuned because we are going to talk about more amazing loan types and the process on our next episode. Thank you so much for tuning in, and we'll see you next time.
Thanks, Al.